This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. I'm going to give you a stock market update for Friday morning. And I'd also like to go through and when I go through the specific time frames, I'm going to talk about what's taking place here recently, which could be setting up a potential down move for the market. So let's go ahead and get into the details of this and look at the charts. Before I get into the analysis, just wanted to make you aware that if you go to rabilstockresearch.com/book, you can get the PDF version of the book for $5.99. Now, the Kindle version is $9.99, and the paperback version, which is a nice big book with nice big charts as well, is on Amazon. But I wanted to make this available to more people, so for $5.99 for the PDF, and it will... I think most of the guys that have learned my approach and are now subscribers or are on the course, they started with the book. I think it's a good starting point if you're interested in this method and you want to learn more about it. All right, so you can go to rabilstockresearch.com/book. Okay, let's go ahead and get into the market conditions. So right now, the sentiment is at 37% more bulls than bears. So we're starting to get up into that region where we should start to be a little bit more defensive, a little bit more careful about new buying. There's 55% bulls. If we get that over 60, we start to get into more of a dangerous position. If we get this number over 40, then again, we want to get even more defensive. Right now, there's just the elevated risk levels right now, but it's enough that I want to put this in negative camp. The overbought oversold oscillator is also just on the far end, or just barely touching this line here, this 70 line, so it's still considered overbought. But more important to me, we've got this little miniature divergence that's kind of formed where we've made a slightly lower high and about to make a lower low in this RSI 5 on the weekly. So from that standpoint, again, both of these are sort of on the negative side. Now, I'm going to get into this in a minute, but we can see there is some error between the current price and the 18-week. When I get into the trend analysis, we'll talk about this. But if you're interested in learning a little bit more about what I consider to be retail entry versus a wholesale entry, watch my show today on Stock Talk. I go into that, finding wholesale opportunities. So just wanted to make mention. All right, so volatility. The weekly and the daily are still very positive. You see how this blue line, which is the moving average of the average true range. So this is the average true range line. It's a 20-period average true range. It just keeps dropping and keeps making new lows, and the moving average is dropping above it. That is a bullish sign. It's not really negative, because typically we're going to see volatility increase, and that's a sign of increased distribution or indecision. And when we start to see choppiness develop, that causes the average true range to go up. We're not seeing that on the daily chart yet. It's maybe starting to tick up right now, but we haven't seen anything yet. The same thing holds true on the weekly. Look at how steady of a decline this has been on. This average true range just keeps dropping. We can see the size of the bars. They're just not that big versus where they were back in here. Very huge bars, relatively speaking. They've been shrinking. And now in this last part of the sequence, basically all year, but really over the last 2-3 months has really gone down, and it just we're going to see an increase. We should see an increase in volatility before we see a big drop in the market. That's typically what I would expect. So from that standpoint, those are still very, very bullish. The trend and the momentum are still positive for both the weekly and the daily, and they're neutral for monthly. The monthly trend and the momentum for the monthly as well. Let's just take a quick peek at my timeline chart. This is all the 18s on one chart. I've got a daily, weekly, monthly, quarterly, and yearly 18 MA, all of these lines overlaid onto one chart, right? So we can really see what's going on. And the slope of the line in each time frame is telling us essentially what the trend is for that time frame. So this is a short-term trend daily. We're above a rising 18. The weekly, we're above this line, but we've got some separation here. If you notice, we're above the monthly line, right? But we're sort of stretched away, and this line is declining. So it's more of a neutral situation. I mean, you have to have more of an upward bias because we're so far above it. But at the same time, it's not a good entry point when you look at it from this standpoint. Look at how far away these two lines are relative to where price is right now. So you got to be really careful about new entries. Now, I'm going to go into a little bit more detail about the momentum on the short-term pattern that could be telling us that something is developing for this to be alleviated, meaning we're going to work our way back down towards this line. But this is a good chart to keep an eye on to let us know basically what's taking place in each one of the trends. All the trends right now are essentially bullish except for the monthly. The monthly needs to cup around and kick into gear. This is the yearly, that's the quarterly, right? So we came back to the quarterly line, we worked our way through the monthly line. We're above a rising 18 week, we're above a rising 18 day. If we break the 18 day, we should expect a correction back towards the 18 week. We're going to need something a little bit more definitive than what we've seen right now. We just came down and tested this line, but we haven't broken it. All right, let's go into the individual time frames because there's a couple important things that are developing. Number one, look at what's taken place. The MACD is crossing above the signal line. All right, now that's happening on this little bar right here. It's only a couple days old, right? So we don't have a close. So if we finish off the month and we give this back, it's possible this will come back down. This will come back down like this, and it'll actually be below that line. And by the end of the month, it'll show that it never crossed, right? So you have to recognize that right now we're at the beginning of the month and it's showing that it's crossing. To me, that's a positive sign, all right? But I want to make a point here. And this is something I talk about in my book, actually, where if you notice, we have a green bar here, we have a bottoming bar, and then a green bar. Let me zero in on this so you can see a little bit better. So we get a nice reversal bar, turns green. Another up bar here, another up bar here. Look at all these green bars. And then we get a big green bar, and now we get this bar here. And now we get the cross. Is this really a good buy point? Like, is this a good signal to go long? I used to study this in depth and tried to figure out, well, everyone's telling me the crossover, the MACD crossover is very bullish, but in reality, in this case, it's really not a good entry point. Now, it's a positive sign, but that doesn't mean it's a trigger. Right? And in cases like this, I'll typically look for some kind of a pinch or something when it develops this way, just because it's not a great entry point. Now, it is improving the bias. The bias is improving to the upside. I'd like to see green DI do a little bit more to the upside, and I'd love to see this 18 start to turn to the upside. It's flattening out, but it hasn't turned up. So I'm going to leave those neutral for now, and it's very possible we could take a little breather here while this cups around, right? And that might actually improve the trend without going up. It's very possible it could play out that way. So we got to see how that works out. All right, let's go to the weekly, which is kind of the main chart here in terms of what I've been focused on, because we've got this channel in place and we're running up towards this upper channel area. We've gotten pretty close. I mean, if it turned down from here, it wouldn't surprise me if it wants to come back down towards the mid-band or what I would consider to be the 18 of this kind of channel area would be right around the 18 MA. And it might do that right now based on what's showing up on the shorter term timeframes. But when I look at the momentum in place, I would be inclined to believe that the next pullback here causes another move to the upside. I think there's a much bigger problem as we work our way up towards these highs. But we have to be open to the possibility that we pull back and go up again. All right. Now, if we don't pull back, right, we've got the conditions in place to pull back, but if it doesn't, it might just go ahead and bust right up into this top area, and then maybe we'll see some form of a climax develop if it wants to play out that way. So let's go ahead and get into a little bit more detail in terms of what's going on the shorter term time frames. So again, if you watch stock chart today, I go into the RSI divergence. There's an RSI 5 divergence, and there's also an RSI 20 divergence taking place. So if you want to pull those up, you should take a look. I know my subscribers have that set up on their on their charts. So you do want to take a peek at that. But I don't, it's sort of redundant in a way. One thing I want to make a point of is that RSI, if I were just going to use one indicator to do divergences, I would tell you that I would probably use RSI. If I were going to look for divergences only, I would probably use RSI for that. But I use, obviously, there's a lot of different things I'm looking at, and we can see that this made a slightly higher high here, and we made a lower high in MACD. All right, we've also making a lower high in the DI lines. Now, I know the ADX is making a lower high, but that's not as important to me in this situation because we're well above the 25 line. We can have an ADX line that's showing a drop like this, and it doesn't necessarily mean anything because it's so far above the 25 line. This is a very, very strong trend still, but it's showing signs that it's a little tired. And we can see that in the price pattern, actually, where we go to a marginal new high and turn down. We're also seeing it in the MACD, right? Because we're making a lower high here, and we're making a lower high in the DI lines. The DI line is going to be a little bit more sensitive than the ADX. Remember, if you've watched my video on the derivatives, all right, this is a first derivative, is a second derivative, and the ADX line is a third derivative, right? So we have to be careful. We have to follow price and know that there's a little bit of lag to the indicators. But what's taking place here is we went to a marginal new high. We didn't get MACD confirmation. Now, the other point I want to make on the DI, you see how we made a higher high in the red DI, but we didn't make a lower low in the green DI. You see that? So we made a lower high here, and we made a higher low here, and now we're making a higher high. So what is that telling us? Well, one of the great things about ADX is, in the DI lines, is it gives us three different pieces of information. So this is trend strength. This green line is telling us the strength of the buyers, and the red line is telling us the strength of the sellers. So the sellers are getting stronger here. This is the first sign we've seen of improved selling strength in quite some time. All right, we're making a higher low and a higher high. Now, what this is saying is that the sellers actually aren't at that weak yet. If they drop down to here, now we've got a little bit more confirmation of a contraction phase starting, and probably something we need to be aware of. I'd be keeping an eye out for that. Now, notice what's happened. We've pulled back to a rising 18, and we're kind of bouncing off of that. Now, there was a gap involved, and but the volume really wasn't that bad. I mean, it's less than normal volume, and we're still respecting this 18 line. So we have to keep that in mind when we go down to the smaller time frames. Now, what I want to do is I want to explain this pattern. So it's a 3 time frame setup, right? We're stretched away on this time frame. Once we get stretched away, and it's been stretched away for about 3-4 weeks. Once that happens, we start to look for signs of divergence on the next lower time frame. That's the daily chart. We haven't seen any up until the last couple days. We saw divergence developing, right? Now, I don't trigger in on this time frame. I go to this time frame to help me trigger into the trade. But I'm not going to fight the 18-day. Meaning, I know I've got divergence here, and if we've just bounced off the 18-day, I don't know that I want to take a trigger here until I either break the 18-day or I have room to the 18-day. Hopefully that makes sense. So if we rally back up here and turn back down, and we form our a 1, where we've got a 1 in place. Whoops, let me just draw this back. So we've got a 1 in place here. We're forming a 2. And if this were to form a peak here and look like a 2 has formed, but it happens above the 18, I'm a little less inclined to want to take that, right? I mean, I don't really want to go down to a 10-minute chart when I don't have any room to the 18 MA. I'd rather break the 18 and play for a bigger move here. So I'm hoping this is making sense. I think we have the potential for a 1, 2, 3 to develop. I think if we get that 3, then we will break the 18-day. Then we can start to feel a little bit better about the potential. Divergence starts to move to the downside. Then we break the 18-day. Then we can get a little bit more corrective action down on the weekly. Now, there's a couple of flies in the ointment here. Number one, the last move to the upside showed pretty good strength on an ADX basis based on the buyers. The buyers were pretty strong. It wasn't like the buyers were dying out and then we got this move to the downside. So that's one thing. But the sellers have shown up, like I said, right? It's just the buyers were a little too strong here, so it's going to take a little bit more work to get through them. So that's one thing. The other thing is the MACD has worked back down to the zero line. It hasn't broken it yet. So we have to kind of watch this. In my opinion, I would be waiting for the 3. That's how I would play this. I don't think I want to do this north of this horizontal line. I don't want to get short north of this horizontal line because I've got the 18-day right underneath this, right? If I wait for the 3, I'm going to be breaking the 18-day, and then that really increases the odds that these want to fill in. This is going to come down, and we could come in closer to the 18-week. I think it's a better trade. I really do. So that's how I would be handling it. Now, if you want to go down to the 10-minute and play this opposing trend signal, we're going to get a potential opposing trend signal. You can do that. I mean, you're welcome to do it, but you're kind of ignoring a pretty strong line that's been in place. And so I think they're lower odds. Now, your risk reward is better on this trade. Okay? If you take this trade and it works, it's going to be a huge, because I don't know how you're going to handle that. You'd probably have to stop yourself out here. So if you get short here and you put a stop here, you've got very, very small risk and if it works, it's big potential. So there's nothing wrong with doing that. You just have to know that this type of trade, when you do this type of trade sitting on the moving average like that, the odds of success are smaller. Right? I'm going to wait for a little bit more confirmation, and maybe I'm taking a little bit more risk for that, right? I'm going to wait you have to pay up for confirmation. So if we wait for that, I'm going to be taking this much risk, which is on an hourly chart, which is a little bit more than what we were showing on the 10-minute chart. So yeah, I'm going to be taking a little bit more risk, but my odds of success are going to be better. I hope you understand that relationship. You always pay up for confirmation, but in this case, I think it's well worth it. All right, that's the update for the week. Go ahead and let me know if you have any questions or comments.